Here's some reprieve for motorists. Following a big-time hike last week, oil companies have announced a rollback in fuel prices effective tomorrow, September 6. Gasoline prices will drop by 2 pesos and 60 centavos per liter, while diesel prices are set to go down by 1 peso and 55 centavos per liter. Meanwhile, per liter prices of kerosene will be reduced by 1 peso and 60 centavos.
To talk to us more about the expected oil price movements tomorrow, we have with us on the show Rino Abad, Director of the Oil Industry Management Bureau. He's joining us over the phone. Welcome to The Big Story.
Good evening, Ma'am Gretchen and Sir Cito. Good evening to our kababayans po.
Sir Rino, after 2 weeks, bumaba na naman po yung presyo ng gasolina. What's driving all of the movements lately?
Well, apparently we're again experiencing the same nexus of events happened in July, August, which actually caused the massive rollbacks for almost 1.5 months. We have this a case again in China locking down. We have also, in response to the massive increase in per dollar U.S. barrel of oil last week, European Central Bank policymakers actually made a case last week, last Saturday, for an inclination to a big policy rate hike next month, and that was actually reinforced by the United States Federal Reserve getting also into pronouncement that they're looking at increasing another round of policy rate, if not this month, probably next month, starting next month, and maybe even going as far as the end of 2023. So these three major events actually are targeting the lowering of economic activity, and at the same time, we could expect that that would also affect lowering the fuel demand.
Director Abad, what are your readings on the next 2 to 3 weeks as far as market demand and prices of oil? Because there are some people who are saying that with the entrance of the Burr months or winter in the other side of the world, that the demand and supply of fuel is going to be tough and the prices will go up. But this reduction of price is kind of confusing some people.
Yes, Sir Cito. I think really the price now is very volatile. We're taking an observation that price changes in a matter of 5 days, 5 trading days, and there are actually amounts that are related probably on a daily basis. So what we're seeing now is that this is a similar case of what happened in July. So if we could take that experience in July to way back first half of August, then if U.S. and the Europe would follow through with the actual interest hike, another round of interest hike implementation, then we could expect that a big factor would be an inclination towards a downtrend of price. Okay. But at the same time, on the opposing side, as you correctly mentioned, the northern hemisphere countries will be entering the winter season, and they will be needing much of the natural gas actually. But we know for a fact that they're having problems with the Russian natural gas supply, and the alternative would be an oil alternative for that natural gas and LPG. So what I'm confident of is there will be a tight supply for LPG. But let's see on the oil because as reported by the European Council, they have now achieved at least 80 to 90% of the stock of natural gas. So nothing else taking aside of any extraordinary event, they might hold on to that natural gas supply until the end of March. And it might not affect the oil that much, but that would actually be a very tight supply as well.
Okay, thank you very much, Director Abad, for that bit of information.